Hello and welcome. You're watching Business Plus. After the failure of Silicon Valley Bank and Signature Bank in the US, First Republic Bank's shares have now plunged to a record low after the lender announced that depositors withdrew more than $100 billion, prompting fears of further bank collapses. Now, First Republic stock closed down nearly 15% on Tuesday after the San Francisco-based lender disclosed that it lost almost 40% of its deposits in the first quarter of the banking sector, as the entire banking sector suffered overall its biggest crises of confidence since 2007 and 8, which is when the big financial crash happened. First Republic there, of course, and its shares plunging after. And on the back of that news, with me at this point in time in the studio is my colleague Karthik Malhotra. Karthik, what exactly has led to this sort of depositors withdrawing a lot of money? We understand this comes on the back of major banks collapsing in the US. What's the future looking like for First Republic?
So, Shweta, it's important to understand that First Republic Bank, unlike, let's say, Silicon Valley Bank, is known for its wealth management. It is known as a bank, unlike Silicon Valley Bank, where all the startups and all the big tech park their money. First Republic actually caters to the affluent Americans. It caters to the high net worth individuals living in the US. And the bank largely caters to these HNIs and helps manage their wealth by investing it in various asset classes. Now, the data that has come out of $100 billion worth of withdrawals, this comes again in the aftermath of the bank run that we saw in the month of March. The data got announced only today, and it's for the quarter of Jan, Feb and March, with a major chunk of this 100 billion actually happening in the month of March itself, in the aftermath of the bank collapses. Now, First Republic was incidentally the third bank in the US after SVB and Citizen First, which actually went and sort of realized that it has trouble on its books. And thereafter, it received a fairly handsome $30 billion package from the US and a couple of consortium of other banks pooled together in a bid to rescue this bank. And after that infusion, fresh capital infusion happened, it became a systemically important bank as well, which means it pretty much falls in the global category of too big to fail. Okay. Now, this $100 billion has obviously spooked investors tremendously. And while First Republic lost almost 50%, 49% at end of trading session early this morning, India time, Tuesday, US time, we saw that even other bank indices and other bank stocks have gone downward. So there's an overall spiral down. Okay. So the fears, when one thought that the worst is behind us, apparently it's not. So those fears have resurfaced. Now, two important points which are coming through this headline today. Number one being that now looking at its books, and to sort of not be a bad bank, so to speak, now looking at its books, Bloomberg has just reported that First Republic Bank could divest up to 50 billion to 100 billion worth of assets from its books. So it wants to become asset light. The second unfortunate report coming out is that they will look at operational efficiency, which pretty much means they are going to slash maybe 20 to 25% of its headcount.
All right. There was a fear of contagion effect after First Republic, Silicon Valley Bank, Signature Bank. Do you see that contagion spreading further? What's the future looking like for banking sector in the US? Is the worst over?
That's $1 million question which everybody is grappling to find the answer to. And we all thought that UBS took over Credit Suisse, so Europe was taken care of, and we saw that Silicon Valley Bank and the mess that sort of the bank run that happened was all over. But this $100 billion is obviously a big figure, and it's difficult to predict whether the worst is over or we will see a fresh round of withdrawals across the banking sector in the US, and that obviously will have a greater implication on the US economy as a whole. Okay,
before I let you go, or we move on rather from this story, what's the impact on India bank?
Next to nil, I would say, because even during the banking crisis at its peak, in the month of March, which started around the 8th, 9th of March and carried on pretty much for the whole month, we did not see any ripple effect on India. Okay. I think the only fear was that the Indian IT sector, which caters to US banks through its its services that it offers could take a little bit of beating. We've seen banking results also, they've been slight underperformers, but overall I think the IT stocks and IT sector earnings have been okay. So I doubt there's going to be a direct impact on India, but yeah, it will have a direct impact on the US economy, and that could again result in Fed tinkering rates and all of that, and that may have an indirect impact on India.
Okay, so not very good news coming in there from the banking sector in the US. We're going to keep tracking that very important story. But shifting focus for now, shares of Microsoft and Google's parent Alphabet rose by 4% and 3% respectively in after-hours trading on Tuesday following the company's stronger than expected earnings result for the March quarter. Now, Google's parent Alphabet reported profits from the first quarter, which fell slightly from the year-ago quarter to nearly $15.1 billion or $1.17 per share, but still beat expectation. The company posted $69.8 billion in revenue for the first quarter, up 3% from the same period in the prior year. On the other hand, Microsoft posted income of $18.3 billion, up 9% year-over-year, far exceeding the expectation. The company also posted sales of $52.9 billion, up 7% year-over-year, ahead of the $51 billion analysts had expected. The expectation, of course, was that Alphabet, which is Google's parent company, will do better, but Microsoft, they're beating all expectations.
Right. So we'll come to the comparison of Apple and Alphabet and Microsoft subsequently. But I think what is important to note again in this headline, if you go a little deeper, is the fact that Alphabet for the first time, ever since it got listed 20 years ago, has seen a dip in its digital revenue, which means ad sales on its digital platforms, including YouTube, have taken a beating. So overall ad revenue has fallen 4% in this quarter. Google has never seen a dip in its digital ad revenue. So that's a big news coming out. And why is this happening? There seems to be a very direct migration from Google search engine to the AI chatbot, ChatGPT powered Bing, which is owned by Microsoft. Now, 4% overall decline in ad sales, 2.5% decline in YouTube's ad sales. And YouTube, of course, you know, when Google bought it, it was this new chip on the block, new kid on the block, which everybody was very, very bullish on, and it has added tremendously to Google's top line and bottom line over the last 20 years. But for the first time, it has seen that there's a dip in ad revenue of 2.5%. On the other hand, in the case of Google, cloud computing has actually helped the parent company Alphabet rake in its top line. So we've seen a quarterly profit of about $15.05 billion, which has given an earnings per share of 1.17. Now let's compare this directly to Microsoft. In the case of Microsoft, we've seen that overall there's been a 9% increase in profits, and the quarterly earning has surpassed that of Alphabet at $18.3 billion. So 15.05 for Alphabet versus 18.3 billion for Microsoft, which has given an EPS or earnings per share of about $2.24. Now, I think it's important to look at the SWOT analysis. If you were to compare these two big tech giants sitting in the US, it's important to look at their SWOT analysis, and incidentally, you will notice that the strengths of one are actually turning into the opportunity for the other. So broadly, when you look at a SWOT analysis, you will see that Google's biggest strength right now does not happen to be its search engine. Right. Its biggest strength happens to be cloud computing, if you were to look at the quarterly results. Its biggest weakness right now is what was its earlier strength, which is its digital ad revenue engines, which were largely YouTube as well as Google Search and AdWords and all the other digital products that it offers. On the other hand, its opportunity today lies in the success of Bard, its AI chatbot. And that, for whatever reason, has not really kicked off as significantly as it has in the case of Microsoft, that invested heavily, $10 billion, if I remember correctly, in ChatGPT. And the biggest threat, obviously, that Google faces right now is from its rival Microsoft on exactly that account, which is ChatGPT. But when you look at Microsoft's SWOT analysis, Microsoft, the biggest strength it seems to have today is incidentally ChatGPT, its AI chatbot, followed of course by the weakness which it has is on its search engine Bing, which has thus far not compared well with Google's own search engine. But now with ChatGPT being enabled in the Bing search, the threat that Google faces of ChatGPT-powered Bing taking on its search engine is incidentally the biggest opportunity for Microsoft to be able to go hammer and tongs after Google and Google's business model and really arrive at a solution where it happens to further dominate its position in the chat engine. And its threat, incidentally, is the opportunity that Google is playing with is the success of Bard, if it ever happens.
Okay, and success of Bard, I mean, that's a million-dollar question again, because on the back of Bard, we know, and major failures there of Google living up to the AI expectation that it had created.
Yeah.
We understand that Bard, when they were trying to launch it big time, did not really help Google. The stocks went down. Now, in this war of AI, who's going to do better? It appears that Microsoft seems to have taken a lead over Google.
Yeah, I mean, numbers are not yet in, and it seems, fairly premature right now to believe that Bing has or will in the foreseeable future overtake Google's search engine. That does not seem to be the case in numbers as yet. But with the success of ChatGPT, with the success of let's say, the integration of ChatGPT in Bing, Google's biggest worry right now is that Bing is going to eat the cake, eat the cream on the cake, and perhaps eat the cherry as well.
Absolutely. Have you used Bing of late?
I haven't used the Bing version with ChatGPT integrated, but people I've spoken to who have done a test run of the AI-enabled Bing, they say that this is actually pretty much the next level of search, and this is something that every internet-driven company is going to invest in, because the traditional way of searching for information is going to change drastically, where a chat-like feature where you can interact with your search engine and it throws up more usable information and is able to understand from your multiple queries and able to customize its result is where the future of internet search is.
And Microsoft there happens to have taken a step
Microsoft
over.
with its leap of faith on ChatGPT, on OpenAI,
It's worked for them.
it seems to be working and seems to continue to work for them.
Absolutely. We're going to shift focus for now. You can now use WhatsApp, which you could only use up till now on just one device. You can now use it on multiple devices, because Meta, which is the parent company for WhatsApp, has finally rolled out the much anticipated feature that allows users to access one WhatsApp account on multiple devices. As per the latest update released by Meta, users can now use WhatsApp accounts on up to 4 smartphones. Now remember, Meta has been working on multi-device feature for a while now, and the same is now finally open to all WhatsApp users. Karthik, this is something we all struggle with. The moment you change from one device to another, you insert a SIM, take a SIM out from one device, you put it in another, you can no longer use WhatsApp on your previous phone. It's going to help a lot of WhatsApp users.
That's right. And multiple people actually carry more than one device for various reasons. You may have a personal smartphone, and you may have a smartphone that you use for work. Similarly, you may have a tablet which does not obviously have the same SIM card or the same number that you use on either of your phones. And it's impossible to get WhatsApp to function on a tablet. So now I think what this does is it enables you to sort of make your devices and make your WhatsApp interoperable across multiple devices that you use. So you don't really need to log out of one device to be able to use WhatsApp on another device. Now, interestingly here, what seems to be the case is that even if you have two separate numbers, two separate phone numbers, two separate SIM cards working on two different devices, you will have the choice to actually use WhatsApp pertaining to only one number on both your devices, no matter the number, whether you have a separate SIM card or not. You can pretty much use the same WhatsApp, the same list of contacts which get transported from one device to another.
How helpful is it? Because if I were to have, let's say, 2 numbers and I would use 2 different numbers to access WhatsApp, that would mean more users for WhatsApp on different numbers.
It would not really entail more users, because one number is still linked to one user. It'll have WhatsApp available on more number of devices. I think few use cases emerge fairly significantly here. One, of course, being when you travel abroad. And if you were to carry a redundant phone and maybe purchase a matrix card or any other regional card, a SIM card which has a new number, you usually download the WhatsApp app and you enter the new phone number, and then you receive an OTP, and you add a few contacts that you want to interact with. I think the use case here now changes when you inch in your old device's number onto a new number, and you're still able to import all your conversations and the continuity in your communication.
Wonderful.
Happens.
We're running out of time, but good news there for people who are using WhatsApp. You can now use the same number on multiple devices. Remember, Meta has been working on this for a while now, and it's finally been launched for all WhatsApp users. With that, it's a wrap on Business Plus. Keep watching News 9.